And welcome to today's morning report. Charles Appraisers with me, Rich Market Analyst at Hantec Markets on Tuesday, 12th of September. We've taken on a shift in market sentiment in the last couple of days. Over the weekend, we didn't see too much devastation. I mean, yes, obviously on a human level, there was a significant amount of disruption and damage from Hurricane Irma, but there's not too much destruction in terms of the market analysis of it, and certainly the markets have started to recover. And you add into the fact that the safe haven flow that sort of came as caution ahead of the North Korean national holiday on or National Day on the weekend as well. There were no further missile testing. There was no further nuclear bombs tested. So subsequently, the markets have taken that as a positive, and risk appetite has improved on the back of that. And what we've seen is a move back into back away from safe haven plays. The yen is sharply weaker. The gold price is lower, 13.57. It hit, I think it was Thursday, before unwinding. Actually on Friday's high, I think it was. So it's $30 down from that now, the gold price. So there are a significant move to the downside. Also, equity markets, look at how the S&P 500 closed at an all-time high level last night, as a strong move back into equities has been seen. Now the dollar has also rebounded, and that rebound has come with Treasury yields sharp rebound on the 10-year and the 2-year. And not only that, but also a move higher on the 2s10 spread, which certainly has seemingly sort of helps to improve risk appetite going forward, or is certainly a reflection of risk appetite improvement, and that has certainly helped to drive a bit of a dollar rebound. But as you can see here, lots more work to be done for the bulls to really start to get back in the game properly. And is this just an unwinding move that's going to get sold off again? Well, I'll show you through my charts in a bit that I think it may well still be that case. But what we have got across the board is an improvement in risk generally. Equity markets are higher. The one notable move is FTSE 100, which is again a big laggard, and that's come on the back of UK inflation, which has come out higher than expected on inflation, which puts pressure on the Bank of England. The core inflation 2.7% on the core, 2.9% on the headline. Both of those are higher than expectation, as is the input prices, and that all sort of feeds into inflation going down the road, and puts pressure on the Bank of England, which is due to meet this Thursday. So, lots going on in the markets today. What about your economic announcements this afternoon? We've got the JOLTS jobs openings. Pretty much is the only real thing, and that's 5.96, and that is just mildly down from the last month's 6.16, which was a record high on the JOLTS. But yeah, not a great deal to impact on markets this afternoon. But my chart today is sterling yen, and what we have seen in sterling yen is a significant sharp run higher as the yen has weakened and also sterling has strengthened today. So a sharp move above the resistance. I mean, I looked at this yesterday as I was looking for a chart today, 43.20 as the breakout, and it's just continued to run higher from that. It's just not stopped, is it? 144 was an older level, an old pivot. 144, an old level, which would provide the basis of support, which was potentially a resistance on the way back higher, but it's just smashed straight through there. So between sort of 143. 143.20 to 144 area is a nice basis of support, and I think it's that's going to be now seen as a bit of a buying opportunity level if this market starts to unwind. 66 on the RSI, strongly higher on the MACD lines and stochastics. It's all very strong, so I think this is probably a move that you'd be looking to chase higher, to be honest, because it's on course for a test of that 146.80 level, which is these sort of resistance levels from July-August area. And it looks like the market is sort of bounding on towards that level. You've also broken back above the resistance of an old long-term uptrend. So that is again another technical improvement there, but looking at the momentum indicators, it's all very strong. So looking pretty good at the moment for gains. Now I suppose this sharp move higher on the inflation data, which is what we've seen today, might unwind slightly, so look to use little corrections into support between sort of 144 to 144.50 area maybe as a chance to buy. Stretched obviously on the RSI 87 initially, but anything around 60 on the RSI on the hourly chart is seemingly now a chance to buy. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.